Welcome to Trading Nation. I am Brian Sullivan. We are pleased to be joined today by Mark Mobius, Executive Chairman of Templeton Emerging Markets Group at Franklin Templeton, author of many, many books and global traveler for a number of decades now. Mark, it's a pleasure to speak with you again. Thanks for joining us.
Thanks, Brian.
You know, it's interesting because before we get specific, let's get macro. The whole world has come up. Many people say, oh, well, it's the Trump trade or the GOP trade, but we're seeing a global gain with the exception of a few markets. Most are higher. What's behind it? Is this really truly a global reflation?
Yes, there's no question about that. We're seeing with the talk of interest rates in the U.S. going up, people are now expecting higher inflation, so we get negative rates. In a situation like that, of course, equities are exciting. And for emerging markets, people are so afraid of higher interest rates, not realizing that higher interest rates in the U.S. don't necessarily mean a down market. Sometimes interest rates go up and the markets go up. And this has been happening with emerging markets. Emerging markets are going like gangbusters. If you look at BRIC countries, Brazil, India, Russia, China, they're all up. And a long way to go, I believe.
Yeah, Brazil's had a great run, about a year and a half of solid returns. So you do believe that there's more to come from Brazil. How come?
Well, if you look at the highs, the previous 5-year highs, we're a long way from that. So we've got a long way to go. And the reforms taking place in Brazil are going to have tremendous impact on the country. So we're very positive on Brazil. Of course, there are going to be corrections along the way, no question about that. But generally speaking, the long-term trend is very good.
So you'd view, if we get a slippage in Brazil, you'd view that as an opportunity for you or your clients to acquire more?
Exactly, exactly.
India is not a country that we have spoken about very much, but India is always in the middle of big change. India's market's done well, and you remain very optimistic on India. Are you just buying the Sensex there, their main index, or how do you play your bullish view on India?
What's most exciting in India are the small and medium cap companies. You know, they've got thousands of companies that are listed, and these small and medium cap have not moved up as much as the large cap. So lots of excitement in that area. And the interesting thing about India is that, first of all, it's growing faster than China. And number two, with Modi and his reforms, it's really a very, very exciting picture, particularly with the tax reforms. And most importantly, recently they announced they're going to be selling some of the state-owned company shares into the market. And that's very, very good. It means more reform coming.
Yeah, and it's, we forget that India will be, at current rates, will be a larger country in population than China in about 10 or 15 years. I mean, their population is growing much faster, but with that comes problems as well, Mark. I mean, their infrastructure is notoriously weak. They're unable to build at the scale that China is. Their GNP per capita is still much, much below China. Why aren't those things worrying you?
Well, they're worrying because, you've got so many divisions within India, which is why the tax reform is so important. Each state has had their own taxes and differences between states, which created a lot of chaos. Now they're reforming that, and that's exciting. But I think the important thing about India is that if they're able to keep up this 6, 7, even 8 or 9% growth, they'll be able to do the same thing that China has done. Despite the population increase, they'll be able to increase per capita incomes. So I see that happening. And don't forget, as people get richer, the growth in population tends to be more static. The birth rates go down.
Any reason to invest in Russia? Obviously, Russia's been in the news for many, many reasons lately, but I wonder, it's one of the few markets I referenced at the top that has not done well.
Yes, because the sanctions have been a real problem. I mean, we can't invest in many companies in Russia because of the sanctions. But there are many good reasons for investing in Russia. First of all, they've got tremendous resources. Secondly, they've got incredibly intelligent people with good know-how in technical terms. And the consumer market has been growing there. Some of the big retail giants there are doing very well. So we can see the same kind of growth in Russia that we've seen in many of the other countries.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.